know that prices are firm and they continue rising. And there are several factors for this. As of last week, we saw that the price of hot rolled coils is over $1,100 per metric ton. This is the CRU price. And today we are in a seller's market. The mills have full control of their prices, and they are leading us into a higher price almost every week or every 2 weeks. The service centers have no choice but are supporting the price increases as they are able to pass on the prices to the customers as well. Demand in general is strong, with the exception of a couple of sectors, energy. Also, the oil prices are increasing. And we expect the energy sector will start to come back due to the high oil prices. We talk about the future of the 232 tariff earlier today also. I agree, it seems safe for the time being. There's no indication from the President Biden administration that there is any analysis to end with it. So the prices from the perspective of the 232 tariff seem to be on the safe side. In 2021, the domestic supply of the U.S. mills, they are increasing production, but we have to say that they start from a low level because they reduced the production in 2020. So they are increasing the production, but they are not, at this time at least, they are not surpassing the 2019 level of production. COVID has been a major factor in the pricing in the U.S. We saw a drop on the economy last year, and now we see that there is an increase in the economy activity in these first 3 or 4 months of 2021. The vaccine for COVID is bringing tremendous hope and positive momentum to the market. As of now, 80 million people have had at least one dose, and 43 million are fully vaccinated. So that's a tremendous number of vaccination that the United States has had. So we feel confident that as more people get vaccinated, and the economy will continue recovering quite fast. Well, several mills and customers in Mexico use the CRU to establish their pricing policy. So we will continue seeing that the CRU will have an impact on the pricing in Mexico. I understand that a couple of mills in Mexico also use the CRU index to establish their own pricing policy. AMSA low output is a factor for the shortage of flat products in Mexico, and even though they have increased substantially this month, the production is still below the install capacity of AMSA. So we will continue seeing a shortage of flat products because one of the major steel mills in Mexico is not producing at the full capacity.
Global crude steel production that reached around 1,864,000,000 tons in 2020, down by just 0.9% if you compare with the previous year, even with the COVID-19 impacts. Mexico reached the 15th global place, as we can see in the chart, one position lower than last year. And the bottom right part, we can see the reduction in tons that represents around 10% if you compare with 2019. The two red circles here, it's Asia, it's 6.3%. In North America, Estados Unidos, USA, and Mexico as well, it dropped around 7%. Again, China growing up, it's almost 7%. January comparing with January. We can see in this table the imports of scrap, the historical imports of scrap. So in 2000, highlighted in the yellow, we can see China in 2010, it's around 6 million tons per year. And after the government restrictions, it reduced a lot. Here it's 2019, but 2020, it's pretty similar. No, it's just to have an idea, Mexico consumes around 11 million tons per year and generate just 9. So we have 2 million tons that Mexico needs to import basically from USA, is the main supplier. As you can see in the global, no, is the first table. The GDP forecasted for this year, it's 6.5%. If you take as a reference, here in Mexico, we have a seed bank survey. It's around 28, 30 financial institutions that forecast the GDP for FX, also inflation and other indicators. So they forecast around 4.2%. Here is the case of, I took as an example, it's around 5.6% is the red block in the first table. No, it's basically the change comparing with the beginning of the year is the stimulus, the package stimulus in USA, not the fundamental questions that we are changing the forecast, but the impact of USA economy here in Mexico. I put some important projects that can move our steel market and the construction market as well. It's the Santa Lucia airports. And the detail here is the amount that have for expenditures, comparing with the previous year. The Maya train as well, look, 2.5 billion pesos, and right now it's 36 billion pesos. And also the elections period that we have that could impact some projects. And Dos Bocas, the refinery, it's a huge government project as well. It's the production. If you compare January to 2020 with January 2021, it represents an increase of 3.7% of steel crude production, and the consumption it's almost the same comparing with January. Our main partners, we can see in the right side above, we can see USA. It represents 34% about our steel exports, and the second one is South Korea. When we move to exports, USA is the first place as well.
Most of the imports of scrap in Mexico are from the US. So you have mainly local scrappers in the Texas area that supply the scrap to Mexico. And at the end of the day, it's a competition of prices. Who pays the higher price? Is it going to be Turkey trying to get that scrap from Texas, or is it going to be Mexico? We have a couple of companies in Mexico that are very good at collecting scrap in the area, but other companies rely on traders of the scrap, and those traders are going to be obviously selling to the best poster, meaning that to the best company that comes with the highest price possible.
I will coming back for the China consumption again. That could pressure the scrap market around the world. So we were waiting, coming back to December, as Enrique mentioned, the season period or the winter period, the price went to, we start January with the CFR scrap price in Turkey. It's around almost $500, 483. So it drops, and after the new year, Chinese New Year, they started pressure and uncertainty about the consumption.